Hello everyone, welcome to Weekly Forex Forecast. Today, 10th of April 2022. Hope you're having a good day, hope you're having a fantastic day. So, I don't know, maybe we should start then.
This video/stream is sponsored by Trader Central. Trader Central provides funding for traders, spot cryptocurrency exchange services, and access to trading tools like copy trade software, portfolio tracking, and a social platform exclusive for communicating with trader friends. Sign up now using the link in the description and get up to 30% off on your first plan.
Today we're going to talk about dollar, yen, gold, silver, oil, stock market. Other than that, hoping that you have prepared for the week. Hope that you are, where you're supposed to be. So let's go through everything that we need to go through. So first of all, we need to go through the calendar. That's very important. So the calendar for this week, we have a couple of interest rate meeting decisions this week. We have ECB on Thursday. We have RBNZ on Wednesday, or at least my Wednesday. We have ECB on Thursday. We have RBNZ on Wednesday, and we have Bank of Canada on Wednesday. So 3 interest rate decisions this week. We are going to go through all of them as well. Do not worry about that. If you were in the live earlier today, I think that should be sufficient enough. If you're a member, you should be going through that. And this one is basically for everyone who is not a part of it. It's not going to be that much fundamental analysis. It's not going to be that much that you would kind of expect out of me, because that is mostly for YouTube members. I do this live today because first of all, we have a lovely sponsor if you want to get funded. And the other one is that I am going to be away this week, Tuesday, Wednesday, Thursday. I'm going to be somewhere else, so I won't be streaming. So I basically said to myself, okay, cool, I will do something better or something extra before I go away. So cool. Other than that, we have the COT reports. We have pound, not really much new. We have the gold. We have more sellers, more profit taking there. Wow. Okay, here we go. Civilized money makers again with a donation. Thank you. Absolutely, thank you very, very, very much. I was wondering, do you personally hold your trades over months to gain interest on holding your positions? Yes, I do absolutely try to do that, yeah. You do not need to donate to the stream, but I'm absolutely 100% thankful for that. And thank you very much.
I was wondering, do you personally hold your trades over months to gain interest for holding out your positions?
So, yeah. Tuesday CPI is being projected to be a significant event. Wanted to know what your view on this. Yes, it's going to be, we're going to go through it as well. So gold is seeing more sell buys coming in. VTI coming in more oil to the short side. We are seeing Australian more to the long side. We are seeing pound again. Cool. Canadian more to the long side. That's expected to be that. Euro, which is joker this time, is seeing 14,000 contracts more to the long side, even though last week we fell. And we're going to go through that, why I believe that could be something viable trading plan. And then the other one is dollar index, just taking profit more than anything else. Okay, cool. So taking away all those COT reports, now you know where that was at least. And then I'm going to go through what I'm expecting for ECB this week. And what I'm expecting is, if they're going to have a hawkish stand, which is they're going to see inflation being more persistent than previously thought, we are then going to see a higher euro. So you need to be absolutely on the ball there as a seller and as a buyer as a Thursday. So we can see this week, just because of that, I see that we might have a bullish week this week, basically on the expectations of that. But that's not the whole picture. The other picture is, what is growth going to do? What is Ukraine going to do with the growth? How is that affecting the growth? That's the other side. So you need to choose which theme is the strongest one. Is it lack of growth or worse growth that you anticipate to happen? Or are you going to see that inflation is going to be more persistent than previously thought? So those are those two. The other thing is, are you expecting the ECB to rate more than one rate hike this year? Are you expecting it to come more into September? Now that, if you're going to expect that now, you're going to start buying euro on the expectation of higher interest rate coming down the tube. And last one I'm going to mention, euro generally is open image and a new one. Euro is by the market not really priced in that much of being a hawkish central bank. Okay, cool. So that's kind of that I wanted to show to you guys. The other thing, then we need to go to the charts, right? We need to go to charts. Do you think the French polls? Yes, well, we have the French election today as well. When Macron won back in 2000, I think it was Macron who won back in 2015, it made a very strong bullish move on euro. So, I think that is interesting to look into, but nothing more than that. Do you think the French polls will affect euro if Macron doesn't have a big percentage over Le Pen? I think that absolutely, Brennan, that euro is going to have legs if Le Pen wins or has, but I don't believe that it's definitely something to definitely look into.
But what lot size would you preferably use for long-term holding on a $100,000 account for long-term holding?
Wow. Again, another $5. Thank you very much, Civilized Moneymakers. You really don't need to, but I deeply appreciate it. Thank you very much. That is very, very, very generous of you. So, sorry, but I know this is off topic, but what lot size would you prefer to use for long-term holding on a $10,000 account for long-term holdings? Now, that comes down to your risk, right? So, how I deal with my risk is I would take one trade 1%, and if it goes in my direction, I will add. I will break even the first one, so I always have one trade of 1% open, right? So I will build when I win. When I don't win, I will not build. So I will have 1%. I would always have 1%. So if you're going to use 1% of $100,000, so not $10,000, $100,000, you are going to say 50. Let's say, actually, let's say. I need to think twice. Just gonna do that. 100,000 divided by 1%. That is, oops, I was wrong. 1% divided by 1,000. Today I can't even do that. I do apologize for that. That's of course it's 1,000. And then if you do 50 pip stop loss or 100 pip stop loss, that would make you go down to like 20. Do I do 0.20? Is that really true? Lot size? Calculator? So if you go to Euro USD, for example, you go dollar, you go $100,000, you go one risk, you go 50 pips. Yeah, two lots. Okay, cool. Okay, yeah, that sounds about okay. About 2 lots per trade, and then you build as you go. So stop loss would not matter for long-term holding. So if so, you go down to like 1 lot, and then you go down to 100 pips. or you go down to 0.5 and then you have 400 pips loss. 400 pips is a lot for a long term. So yeah. Stop losses would not matter for a long term. It surely does. It sure does. Stop loss does. You do need to have a stop loss for longer term trade. And the question is, generally now, is dollar bullishness about to end? And if you see dollar bearishness, are you going to take that instead? So that depends on what you think is going to be the future. Are you thinking that we're going to price in more rate hikes in dollar? Or you think you are done pricing in rate hikes in dollar? That's going to be dollar bullish or dollar bearish for the future. The other thing is, do you see higher growth or lower growth? Do you see higher inflation, lower inflation? And all of those are going to lead to dollar bullishness and dollar bearishness. So far, I believe we're going to be dollar bullish. Now, how long is that going to go? I need to still continue monitoring the CPI, the growth, the employment numbers to make a month-to-month basis. But so far we are not seeing any end to inflation. It's still rising. This month I've seen some banks saying it's topping over. So have that in mind when you're thinking long term. So I would definitely have a stop loss in mind, because you have to start thinking, when is the market going to tip over? When has it priced in enough? That's kind of what I'm thinking about. Your strategy is great. Do you work on weekly or daily time frames or both? And how do you manage that? Civilized Money says it also depends on if another country interest rates. Right? Yeah, it does. For example, euro exchanging the dollar, interest rates are like zero. It's negative 0.5 at the moment in euro. And are you expecting euro between now and in the end of the year? Are you expecting them to raise interest rate more than already one rate hike that's been priced into the market? And if the answer is yes, you probably want to buy euro. Now, do you think that Ukrainian war is going to have so much impact on euro? It's going to slow growth. It's going to slow the inflation that the market is pricing in is about to come into eurozone? Then you would sell the euro. So those are future decisions you need to make. None of them are right, none of them are wrong, but I think that it is definitely something you need to make a decision about, and then you need to manage your risk in terms of if you're wrong. So the problem in the beginning is to get going, and just so holding is not a problem, to get going. That the short-term volatility doesn't kill you, as in it goes against you by 300 or 400 pips before then goes in the direction. So that's kind of your biggest risk, I would say, more than anything else. But yeah, Civilized Moneymakers, thank you 100%. Thank you very much for your donation. I deeply appreciate anyone who does it, and anyone who doesn't. You don't need to, but at least I can pay for my coffee tomorrow. Thank you very much. So for everyone else, I also responded to you, and I also responded to everyone who has that theory, or what kind of theory are you going to go with. What do you look at as a trader, as an expert? What do you need to be looking at? I just mentioned those. So hopefully give that a like. If you didn't know that, I hope you'll give that a like. And if you don't, and if you did know that before, thank you for following along for such a long time. Okay, good. I think we could start out with dollar. Where are we right now, and where are we going? So right now on dollar, on the monthly, we are very close to target for the month. We have gone from M2 to around M4. Now, if you're a trader that is trading the pivots, and you are seeing price around 100, you're seeing it being rejected. Of course, this can still go on tomorrow. No worries about that. But you're like thinking, are we reaching a peak soon? Are we getting somewhere here? So if you're thinking that we might soon reach something, you definitely need to think about a bigger pullback before going higher, either down to like 99, 98, 50 before going higher. So right now you are getting more and more risk averse. You need to reduce your risk in your trading account so you don't take a full blown trade up there. It goes down to where you would supposed to be buying, and then it goes back up again. And if you are a seller on dollar, you're still not selling it. You're still just waiting. You're still selling, sitting on your hands, but you are reaching some more interesting prices, and you are definitely thinking, what if it starts falling tomorrow? So you definitely are still just on the waiting line. You're still just, this isn't a reversal by any means. But you see that it's interesting what happened on Friday, because we reached up to 110.85, 100.85, 100.18, and you're seeing that's a rejection. Of course, this can continue on later on, but you're definitely seeing that as a positive sign. And if you see this as a dollar bull, I see that as a whoopsie daisy. That's not good. That's why I say, chill out. Don't take the first bull you see. Don't take the first one you can do. And be more careful. Now, if you're a buyer of dollar and you're thinking, well, where am I? You definitely need to see that price comes down to 95, 99.50, 99.17 before you go for the last kill in the market. Basically meaning that's kind of what you're hoping for this week, and then if it goes further down, don't cry forever. You had a good rise last week. Boom. Okay. Now, oil, which has been asked for by Kapoor, so what's the themes here that is contradicting? Because somebody said, which I am actually quite triggered by, is in a positive way. I got a comment here earlier today by somebody. I'm not going to say their names, but their comment were like in my Discord. They said, "Looks like S&P will touch 4,400." Not very good. I feel you're currently not sharp in your analysis, Ivan. Okay, cool. That's an opinion. That's allowed to have. But I'm saying here to anyone who's out there is contradicting information. So make up your opinion. I'm going to say what I believe, and then you can say what you believe. But then all comes down to, how do you trade your setups? How do you trade? How do you manage your risk? That is way more important than if my analysis is not crisp. Okay? And I hope that everyone that goes to Discord today goes there and are contributing positively. And if you have, I don't know, I wouldn't call it negative remarks, but you have criticism or whatever against me, feel free. But you might also talk to deaf ears. Because I've been doing this for so many years, I know I'm not right always. But I'm going to tell you one thing. For oil, for example. For oil, we have supply and demand. What is supply? What is demand? Supply is producers. For that one, is Saudi Arabia, is America, is Norway, is Libya, Iran, Russia, UK, Mexico, probably also Nigeria and stuff like that. Saudi Arabia is the biggest one. So if they started increasing supply, oil will fall. If Iran comes on, supply will go up and price goes down. When China has a lockdown, demand goes lower, because they are a big oil demander. Now, the thing is, as well, very interestingly here, is that America has started to put more oil into the market. Now, how does that work? How does that look at the chart? That looks like that on the chart. It's a short-term thing currently to drive the market down. But is that sustainable? Not at all. If you believe that this is not sustainable, this is going to go up again. Now, you have a bullish outlook like me. If you believe that China at some point is going to go back and, the supply is going to go back, yeah, sure. If you believe that Europe is doing everything they can to not be reliant on Russian oil, you think oil is going to go higher. Now, it's all about the future. Now, technically, we can discuss technically, but what I'm trying to tell you here today, I think it's pretty good, that you have to make some choices. There's good and bad, against and for, and you need to land on whatever that is. And I respect you landing on that decision. I'm not going to mock you for being against whatever I believe. And then we are in the end going to look at technical analysis. What is technical analysis right now? Technical analysis right now is it's a downtrend. Also, I believe it's a downtrend. Now, the indicator says that we broke into a bearish trend around 28th of March, and we have been falling ever since. Now, that's okay. But now, if I believe that we are going to have more demand, we're going to have less supply, and I believe prices are going to back up again. Now, I didn't wait for this kind of bullish setup. So if I say that this week I'm going to wait for a buy, I'm probably going to buy around 100 and then wait for it to go higher. Now, if I'm wrong and price goes up to 104 and it goes all the way back down again, that's why I have stop losses, and there's nothing wrong with that. If you believe that it's going to go lower, you have all the way up to 100 and something and then going lower. Now, that's without using pivot points, but if I can use pivot points for 1 second, I would say that 98, 99, and 101.50 are good prices to sell. So that's currently the most viable trade plan out there. But if it breaks 101.50, then buyers might come in. I won't buy here because I'm not full, but I believe still wait for your trade setup and you shall be rewarded in the end. It might not be this week, but hey, make your choices. Do you pay attention to 10-year bonds, Ivan? Yes, I absolutely do. And they are currently inverting, is that what we call it now? Yeah, inverting between the 2-year and the 10-year. And that is 100% of the time going to say there's going to be a recession within 2 years or 3 years. And I definitely see that as an important indicator as to anything in this market. And the reason why it goes higher is because the market is pricing in a quite aggressive rate hike cycle, and therefore also the yield will go up. And the market is currently selling the living life out of the bond market. And you're wondering, why would they sell the bond market? Because Fed is going to do what? QT. The Fed is going to do QT of some sort. What does QT mean? QT is quantitative ease tightening, then that means they're going to sell. So, if you, as a market maker, as a bank, let's say market down here, the market will then do what? On the news that the Fed will sell, you will then sell all your belongings at 1.75%. You will sell there, but then you will sell there, and then you will buy it back up here again. Why will you buy it back up there again? Because Fed is going to give you a fantastic rate. Is always going to give the market a better rate than, so the market is always going to win anyways, right? So the market is selling in the preparation of the Fed going to sell. And then everyone's going to buy it, and then they're going to hold it until the same Fed comes back in QE in some years, where right now it's 2.75. It's probably going to be at a lot higher when they start QE program. And then the same market that you bought from, the same Fed is going to buy those back. It's a circle of life that the market always wins. So that's what happens. So right now there's not enough return on bonds for them to be staying in them, and the risk in the market has gone, I would say, lower because the economy is doing great. So is that a good one? That should give you guys an opportunity to give it a like as well. So S&P 500, the discussion of the week in my Discord channel, and there's different opinions out there. Now, someone would say that, well, I think it's going to go higher. Now, I would say that first of all, I believed it would go like that. Now, that was not right. I was wrong. Okay, that's okay. Now, the next part is, am I going to believe it's going to go higher from here? Well, I do so. I do believe any moment, any day is a potential for it to go higher. Now, I don't really have a lot of confirmation at the moment, but I have a strong belief it shall go higher. Now, this is because, there's been some articles coming out lately about, for example, the transportations not doing very well anymore. And okay, fair enough. Okay, I see the risk, but I still see that generally the economy in America generally goes very well. They still need a lot of goods. They still need services to be done. Now, am I going to listen to one indicator, or am I going to listen to many indicators? Okay. So what is it? Well, first of all, generally speaking, for the economy in America, generally speaking, we are seeing that unemployment is at all-time high. We are seeing interest rate going higher, and we have also seen the market pricing in the new rate hikes. So for me, I believe that the market has priced in what it needs to be done of all the bad news, and then we're going to go higher. Now, the Ukraine situation does not matter in this situation. Why? Because it doesn't affect American jobs. Because America is, as an economy, is generally based upon domestic jobs. It's like 75% of GDP is domestic, with some imports and stuff. Not much, and that is enough for me to say, okay, I will be bullish. Now, seasonality comes in and says, well, we should be bullish. And previous years, it has gone higher. That is definitely not a thing for the future and saying, hey, look at how bad we do it. So look at how good we're doing it. Look at how bad we're doing right now compared to other years and all those situations, all those information. The thing is here, people, I have taken a choice. I will stand by it until I probably die. But I would say that generally I would look for buys. That can be based upon a lot of information. It can be based upon just me choosing it. Now, if this falls, I have a stop loss. I have a risk management. So if you believe it's going to go down, and I'm going to do that first, sure. Also, you have a lower high. You have resistance there, clear as a day. And that was a central sell on Friday. You even have a sell at 45.45. Now, that is your belief and your trade setup. And if it goes lower, you're thinking it's going to bounce back again, come back up again, and then continue down to 4,400. Now, that's all good. That's all good. But for me, what I say is the complete opposite. Well, I see this as double bottom. I see this as our high, higher low, higher high. Now, that low there is the big warning sign. I don't like that. So now I am totally just relaxed and say, okay, I will not buy anything until it makes a higher high and then goes higher. So right now I am definitely on the fence and I'm just waiting. So if it goes down to 44, somebody says, what if it goes down to 4,400? Well, it's a blessing. Cool. Great. Fantastic. I can get a better price, and I can cover all my losses, and I can cover all my wins. But then again, if you come down to 4,400, I still need my setup, still need the reversal, still need all of that before I can start buying again. But if this one goes to 3,000 for that matter, I'm not going to cry. I'm not going to cry. Why? It's a better price to buy from. Because the whole market, generally speaking, is set the market to go higher, stock market to go higher. This is NASDAQ, Dow Jones, and all those things. So if you believe that, then sure. Now, the other question is it going to go to 3,000? Probably not. And if it does so, what happened in COVID? What happened in COVID? A recession and unprecedented. All airlines was down. The hotel industry was down. Restaurants was down. Everything was down. And we fell, 40. No, it wasn't 40. 35 pips, 35% or whatever it is. We're still recovered. And unless all the business in America, all the business in the world are going bankrupt, then I definitely believe this is going to go higher. Now, the thing is here, people, there is a pinpoint in the economy that you need to look at. When people can't buy or can't rent anymore, when occupancy rate goes lower, but prices of rent and property goes higher, that's, my friend, is a deadly combination. Because that means we have peaked. When we have peaked in the economy and saying, well, what is really going on here? We can't pay for a house anymore. We can't pay for food anymore. As a general in the economy, as in many people, I've also seen statistics that most Americans cannot tolerate an unexpected bill of $500. Well, that is a serious issue. Now, that is not solved in one day, and it's nothing I can solve. I just know there's a risk of, if prices go so high that people cannot anymore sustain reasonable accommodation, then we have a big issue. Why do all bad things happen around my birthday in February? I don't know, Raphael. Generally speaking, for February, it's a down month, or dollar strength month. Apparently says there's a lot of information in my head. I'm sorry. I'll go back to. Is this interesting to anyone? I can go back to technical analysis. Okay, cool. Now we have different sectors, and generally this is the one that has been beaten the most. And if you look at it as a pivot point trader, you think, it went up to R1, okay, and then went down to S2. Now that's a pretty steep fall, right? That's a pretty steep fall. Now, can it go lower? Absolutely. But as a buyer of this market, I will just wait. Now, the thing is about this market is it does that. It just goes down to some random numbers, probably at the monthly, by the way, and it does something totally different. Now, what is that, you might ask? Target for the month, and it went up to R1. It took profit. Now it went back down again. Where do you think we're going to go? I believe we're going to go into Central, M2, or M1. Now we'll look for reversal at all those prices. Now, Ivan, are you going to lose your entire account in this one? So, 1%, 2%, 3% in total. No, I'm not going to lose my account on that. And do I believe that do I see the risk of losing my account? No. Now, if you believe that we're going down to M1, for crying out loud, sell it then. Right? Crying out loud, sell it then. Right? Don't look at me for buys if you believe it's going to go lower. If you believe that everything bad is going to come to an end, sure. Have fun with that. So, Canada. I was about to find Canada. Canada is expecting a 50 basis point rate hike this week. So it's between 25 and 50 basis points. Now, most of that is priced into CAD already. So you're not going to see a lot of extra strength. You might even see Canadian dollar falling after the announcement, unless there is more expectations for more rate hikes. I can't make you understand that, or I won't trade on that. What I would trade on is what does the Canadian central bank say, and is it priced into the market? And if it then falls, then yeah, cool. Then we can do a fall. But I believe that there's going to come more interest rate hikes into the future. We're going to have more inflation. And that's just how I have chosen to take it. Now, if you look at Canada employment levels versus the American ones, Canada is way stronger. It's way stronger job creation than America. Now, is that a good comparison? Probably not. Two different countries, two different demographics, and Canada is way smaller and all those things. But in general, it's still two economies dependent on oil. They are all dependent on have most of the same natural inputs. So they are some way they are close and some way they are far. Okay? So, Australian dollar. Now, this is probably falling now because of lack of inflation, lack of economic performance in China. Now, that's okay. Now, what you need to worry as a technical trader is that. What's that? That happened there. What happened? It fell down pretty hard, went back up again, and fell pretty hard again. So if you're expecting that to happen this week, you're looking at 75.80, 18, and then lower. If you are a buyer of Australian dollar, US dollar at the moment, I would say, wait a minute. Wait a minute. Why do I say wait a minute? I say wait a minute because we are at a lower low. Okay? That's all I'm saying. And if you have trades here, manage your risk, manage your loss, so you don't lose your entire account, but definitely come back at some point when we have the same setup yet again to go to higher levels. Okay? Am I talking too much? Okay? Yet again, something else. Now, if you're looking for like fundamentals to fundamental analysis, Australia, what do you get? You get some Australian Investors Association. Okay. Fair enough. Well, the question is, do you expect more growth in Australia? Do you believe that Australia now is going to do better, or do you believe it's going to do worse? Right? Do you believe that the commodities are going to go higher, or do you believe it's going to go lower? That from the current level. And what we have been seeing generally for the commodities market is that it has been quite elevated still, you know? So I can't remember what coal is. Is it coal? Not really coal. It's iron ore. Australia. China. Just for the fun of it. TSI iron ore orders China 62% index future. Yeah, okay. It's still quite elevated. It's still quite high. I don't know if this is the right one though. But it's done a fall, but also done a recovery. Now if you think that iron ore prices are going to go back up again, then you're thinking this one has more legs to go. And do you think that it's going to be more higher interest rates in Australia, and you believe that the current Australian policy is a bit off track and it's not as bullish as you would like to, then you would just wait for the bullish move. Okay. Why are interest rates in the euro so low? Because they don't have growth. They don't have employment, and it's a big economy, continent, whatever you call it. So there's a lot of different ones, like also you have to include, Eastern Europe. That's also a part of Euro, or Eastern part of Europe, where they don't have that much growth. And then you have versus Germany, which has more growth and more employment. So you have a whole group of countries that has very different economic development. And so far, ever since Euro was made, they haven't really created inflation. So low rate is because they're trying to stimulate inflation. They're trying to stimulate job creation. They're trying to stimulate more supply of money, and I can't remember for how long they've done it, but it's quite so many years, and they still haven't been able to. The same thing with Japan. They've been trying to create inflation for the past 30 years. Right? 30 years. And we still haven't gotten inflation in Japan. So far, I would say the outlook for Australian dollar is probably a bit lower and then higher again. So just because of that technical lower low, I don't like that technical lower low. So same thing for Australia, for New Zealand. If it comes back up to 68.98, you're definitely allowed to sell it down to 67.20, and then we can take it back up again. So right now, it's not looking that good for the New Zealand pound. I am probably the most tunnel visioned on pound that you can ever be. Okay? I believe pound should go higher because I believe there is more inflation to come that has not been priced in yet. All right? Now, we made a low on Friday, as clear as a day. Now, I would say if you're a seller or anything, pound should go lower, and technically it made a lower low, you should then be, definitely selling it. But I would have the patience of a saint and saying, if it goes lower down to 128.50, I will wait for that. But I would rather see higher high this week, pull back, and then buy it. Okay? So right now, we're definitely in a place where I don't like it. It's kind of bearish. It's kind of bullish. But also we are at the support. So if you're going to sell this, you definitely need to have some kind of price back up again, in this coming week. And if you can get up to 130.50 or 131, sure, have fun with it. But I am personally going to look for bullishness all the way until I die. Pound Swissy was low, was mentioned as well in that category. And it's kind of the same thing, where last week I was expecting this one to go higher, apparently. It made some higher highs and higher lows, and then it went a bit lower again. Now that's the world with pound Swissy. You never know what's going to happen next. I'm not at all an expert in pound Swissy, but I would love to see that happening. Now it didn't happen. Now you are down to a 50-50 market at the moment here. 50-50. It can go both ways. It can go higher from here. It can go lower from here. Is that a market you want to be in? That's totally up to you. I'm not going to force you to do any of them, but I would personally just do, whatever. So when the views are that it can go both ways, and that is not a market I want to be in. And you can probably just, I'm just going to mention to you, you can sell 122, or you can buy 121.67 after it done that, and that's a very aggressive buy, by the way. But nothing else than that. Okay? What is the best way to position yourself whenever news comes out for central bank raising or cutting interest rates? That the interest rate decision has already been priced in 3 months ahead. So you need to be, that's where the money is 3 months ahead. Now when the market comes up to the interest rate and there's no more news, that generally creates an opposite flow. Like if it has been dollar bullish for 3 months, that's going to create dollar bearishness. Or for Canada, it's been strong for 2 or 3 months, but now we come up to the interest rate decision. Now that's going to create some bearishness. So what is the best way? Is probably actually exiting your trades. If you believe it's going to be a change in policy or pause in policy. So just have that in mind when you're trading out there. Is, yeah, okay. You're Aussie. I see your Princeling. Okay. Clear as a kite. I believe it's going to go lower. Now, technically it's not set up yet. Technically it can still go up to 148. Oops, sorry. It can still go up to 148. That är möjligt då. 148 before falling again. So those are your two current possibilities. But it's a 50-50 mode. It's a 50-50. There's gonna be buy the rumor, sell the news kind of a thing. What happened to the pound dollar? Did that at one time. I need to find it. Pound did that one day. Yeah. So this here they raised interest rates. So that week it went higher, but there was no more news coming out. And then they're like, well, you know, whatever, you know. And ever since then, we have been in some kind of range. We did make a high. I cannot remember what that was about. And then we went back in again. And now we are lower than a rate hike. Okay. Now, when was this priced in, though? Something was priced in here. Something was priced in here. And something was priced in here. But generally, it has been falling because of Ukraine, because of a strong dollar, because of a lot of other things. Right? So, make up your opinion and stand by it. That's what I can say today. Okay. Do you guys have any assets you want to go through? That's okay. We've done S&P, we have done DXY, we have done Euro, we've done Pound, we've done New Zealand, we've done Pound Yen now. Yeah, Pound Yen, I'm just waiting for higher high here. I'm all waiting for higher high. Higher high, higher low. Now, I do see that this actually needs a fall before going higher again. I do see that. And so far, so good. More than anything else, brothers and sisters, ladies and gentlemen, I see that we need a fall down to 158.36 before going higher. Cool. Now, are you going to sell that fall, or are you going to buy the rise? Your choice. I have chosen to buy the rise either way. If it goes down to 158 or 155, I will still buy the rise. Because yen still has weakness in it. Antonio Parker says, I appreciate your time this afternoon. And yeah, it's actually 9:27 p.m. Thank you very much. What's your thoughts on CAD yen? We are going into yen pairs right now. So more than anything else, I am bullish biased. I am just waiting for a continuation pattern to the upside, or I'm waiting for this one to go lower so it can go back up again. Australian yen and target is 169, by the way. 169. Aussie yen, same thing. I am fearing that this will fall down to 89.50, sorry. But I still expect it to land at 98 by the end of it. Now, are we going to go higher today or tomorrow? That's all depending on the market, but I want to see that. Now, If it falls, it falls, and I will not participate. Euro yen, another one that I see 132 and then higher would be great. You know, that would be great. But another great thing is also a higher high and then pull back and then just continuation higher up to 142. New Zealand yen, yet again another one that I'm just seeing, okay, cool, it's fantastically high. I think it still has legs to go higher. And I am just waiting, I'm just ambushing it. And I will take the pullback and then higher. So I don't know which one's gonna be. But I will be ready on all of them. Young Google says, I'm so late tonight. Did you cover NAS and US 30? Yep, absolutely, my brother. I've already covered NASDAQ and I will do US 30 later on. Okay? So, all good to the upside, all good to the upside. And I believe that, generally speaking, that gold was in a range last week. There's your buy, there's your sell. Now you're back out at break even. Or you took profit at the bottom, depending on what you did. Now, where are we now? What's that about? You know? Where do I believe it's going to go next? I believe that gold generally can go lower. Seasonality for April is very weird. But it also depends on Ukraine, how much that is going to be priced in. It all depends on China and the Taiwan situation, where if China starts attacking Taiwan, is America going to respond? Is that going to lead to a sea war? Gold is going to move on that. Okay? So, just, you know, just have that in mind as well before you start trading it. Oh. TikTok. Is that any of these are definitely viable, but yeah, as long as we're still in between 1917, 1945, is still what I believe is going to happen next. Nat gas, unbelievably high, still continues higher. I believe this is because, well, Germany is trying to get rid of its dependency on Russian oil. Not that they're able to, or Russian gas, sorry, but we are at a target for the month. This can be the ultimate target, or it can fall and rise from here. But what I do know is whenever we hit a target, it does a couple of things. It reverses. So right now on NASDAQ, it is definitely an out, or it's definitely we did it. Market did it. Cool? Good. Nothing else than that. Silver, I have nothing. Oil, I did as well. US 30, where is it? There we go. Buy opportunity more than anything else. Well, that's just so far. It can fall tomorrow like a ton of bricks. But if you look at the 1 hour here, oops, did I see? If you look at the 1 hour, I see double bottom, higher high, higher low, higher high, higher low. I think it's going to go higher. Now, if you are a seller here, you're thinking, wow, great sell. Fair enough. Have fun with that sell. Continuation lower, and you sell as it falls. That's kind of up to you, but I believe it's going to go higher. So I'm just waiting. That's a good sell. That's a good buy. That's a good buy. And then we continue higher. That has nothing to do with my analysis. The analysis is that I believe it's going to go higher as a conclusion, and I will be doomed fool or a genius afterwards, and there's nothing I can do about it. Germany needs to pull their finger out of Ukraine situation. Well, that is more than that needs a bit more than just pulling it out. They need a whole LNG terminal that is not built in a day. US 30 fundamental size is just generally the American economy, and specifically industry related. Is it industry related? What's DOW? DOW is not technology. Dow Jones Index, as far as I know. Maybe I'm wrong at the moment. Industrial average, isn't it? Yeah, industrial average. Yeah. Then I was right. So I would go into the major companies that would make up most of Dow Jones, and see how they're doing. How is their business going? How is their sector going? How is American economy going? How is the general risk sentiment in the market? Where is interest rate going to go? Where is the pinpoints for these companies before they're not profitable anymore? It's kind of like it's a specific company's analysis. It's a sector analysis. It's a stock market analysis. It's an economy analysis of American economy, and it's a global risk on, risk off analysis. And then in the end, you will get some kind of feel of where is Dow Jones, where should it go. Then you need to look into seasonality. And what are those sites? Oh, those are financial Jews. Those are generally probably also Bloomberg and all those other ones. And you need to go into company specific. What do you call it? Company specific balance sheets, and then make up a general bias based upon that. But also, where are we in the world? Where are we right now? How are we doing it? And that's just generally reading bank reports, basically. But yeah, CHF yen, please. Cool. But yeah, I see this one going higher though, but could be wrong as well. New Zealand dollar, we've already done. American. Yeah. I've heard that the VIX is very important for market volatility. Well, it is market volatility. It's the index for market volatility. So it's just an indicator of market volatility, more than anything else. Of course, you can trade if you want to. I have heard people do that. But it's just to tell you where are we right now, right? And volatility right now, we are down at 21. So we are not really high volatility. It's average, a general good volatility. Swiss yen has gone to high heavens. Continues to go up to high heavens. I'm just going to say one thing though. If Euro Swissy, it's not dollar Swissy. If Euro Swissy hits 1 again, expect weakness. Expect Swiss yen to go down again. If it goes down to there, expect it to do that again. So just follow Euro Swissy. What does it does? Don't trade it. But if it goes down to around 1, you can expect the Central Bank of Switzerland, Swiss National Bank, to do something about it. Market is trying to push Swissy higher, and Central Bank is trying to push it lower. So right now you have, a pretty cool high on Swiss yen. But I won't say too far until it might do that. Just saying. So continue buying if you want to, but just be aware of it all of a sudden one day just saying good night, and you need to monitor your Swissy every day. Alright, people, we've been here for 59 minutes. My brain is dead more than anything else right now. I've been talking so long, been thinking so fast. I saw that one guy asked for the giveaway on Friday. It's nice of you to think of that. So I don't know if I'm gonna give up. I want to look into more giveaways in my stream. I haven't done it yet, but hopefully there will be some giveaways in the stream. I just need to make sure that I can do it properly, but I don't know, is there any interest for it? Say yes, I guess, if you're interested in it. Other than that, I will, because some are, some are not. So, and I think it will be somewhere around now. It will be somewhere around $20 to $50. Maybe $50 once a week or something like that. But yeah, thinking of giving away whatever I make in ad revenue. All right. Have a good one. I'll see you soon, and I'll see you back. Boom.